Many traders are wondering right now if gold is going to continue its recent push to the upside amidst all the chaos that we've seen in the world in the last few weeks. Well, in this video, I'm going to take, as best I can, a unbiased or objective standpoint as to where I think gold may be headed next based on what we have in front of us right now. So I'm going to try and do this in a simple way. One way that I'm going to do it is I'm going to use just a simple bullish or bearish chart. And we're going to make a case here for both the bullish side of things and the bearish side of things. And I think it's probably fair to start with the most obvious piece of information that we have in front of us right now, which is of course the war in Israel. Okay, so this is pretty obviously a major bullish catalyst for gold. Throughout history, if you take a look at gold's price, anytime there are major worldwide conflicts or things that really seriously call into question, you know, if world powers are going to get more involved and if there's an escalation in wartime, that is usually a significant bullish catalyst for gold. Just to give you guys a significant example that is, of course, very recent to all of us, is, of course, when we saw Russia invade Ukraine last year. Gold made a run for the highs and, in fact, just barely missed making a new high around 2066, 2070, somewhere in that range. Gold made a mad dash for that price before ultimately coming back down amidst all the rate hikes that we saw stay consistently happening throughout 2022. Again, there are many factors at play here, so I'm going to do my best to keep this kind of a full picture the best I can. So again, war in Israel is a bullish catalyst. There is no question there, because again, any sort of war does call into question, you know, what's going to happen next. And that question is going to drive things like gold and the VIX to move higher. Now, if you don't know the VIX, an elevated VIX price usually is a good sign that markets are fearful, that they're unsure. And so we see that kind of being in the same category, war and uncertainty / fear. This is actually a major catalyst for gold price. And, you know, usually when you have fear in the world, it's going to be a strong driver for gold. One more example while we're on the topic is if we go back to 2020, we saw a massive run up in the price of gold amidst all the other stuff that we had going on in 2020. People were super afraid that inflation was going to just crash the worldwide economy pretty quick. Now, of course, it's not necessarily what happened, and perhaps that's up for debate as people kind of think that there's a lag effect of all these interest rates that could cause recession. We see an inverted yield coming back above the midpoint, which if you know what that means, then you know what that means. Yields rising dramatically, but really kind of the curve coming back into play is a big thing. So in fact, I want to talk about something which brings me to the 10-year. So talking about yields, this is what has been driving the dollar index. The USD has been super bullish off of the back of this. Now, I want to clarify something. What I'm talking about in this video is not going to be a prediction for the next 24 hours of where price is going to go, because anything could happen with worldwide events. But rather, the goal with this is to give you an outlook in terms of the next month, where I will probably be trading, what direction I will be trading gold in if I do take trades. Now, the rising yield here is one of the main catalysts for the strengthening US dollar. In fact, the US dollar being so strong is probably one of the main negatives to gold price and why it could perhaps be a factor that helps to roll over price. So let me show you that now. So we first need to add that the USD is very bullish. And this is a loaded kind of topic, because why is it so bullish? Well, strong economy in the US compared, and this is important, to other major economies. This is really important because a strong US dollar is only as strong as it is relative to other currencies. Because, you know, you ask anybody, if you're in the States, then you know that if you go to the store right now, prices are higher than they've ever been. So the dollar doesn't necessarily mean or feel so strong right now, but it's all about relativity to other economies and strong or weaker currencies globally. Right now, the US dollar is pretty dominant, and that's pretty clear when we take a look at that US dollar chart on the daily, weekly. You can see dollar strength has really been persistent in the previous weeks. So what does that, how does that impact the gold trade? Well, again, gold is quoted in dollars. So if the dollar is strengthening, that's going to put some pressure on gold, I would imagine, right? So the yields rising, that is of course due to the stronger than expected economy. And it's also due to, in fact, I'm going to make this point here. So we have a strong economy, which is strengthening the dollar, but also another bearish factor for gold, and also somewhat bullish. We could even add this bullish for USD. So we've talked about, of course, a strong US dollar based off of the strong economy. But the other side of it is, of course, the high inflation equals Fed rates remain high. And we should clarify the Fed fund rates remain high. Fed fund rate, right? This is going to keep dollar strength for substantial, for the foreseeable future. It's probably why we've seen such a strengthening US dollar recently. The market is expecting the dollar to remain strong relative to other places. So, okay, so we have really some strong stuff here for the bearish case right now, in my personal opinion, but let's see if we can find anything else bullish. So I want to go back to the EDGEFINDER for this, because the EDGEFINDER is specifically built to help us identify catalysts in the markets based on fundamentals and sentiment in the markets. So let's go through the list here and see if we can find stuff. So if we take a look at COT data, this is going to very quickly be another bearish factor for gold. If we take a look at the commitment of traders data that we have under here, you can see that in terms of the positioning, we see gold has just under a 60% long to short ratio, so 60% long, 40% short. So that is, overall positioning is slightly leaning towards bullish, but what you can see here is that recently we had an outflow or a bearish move in gold on the commitment of traders data, and a bullish move in the dollar. Now, if you don't know what this means, let me clarify by going to the Smart Money Tracker, which will give us a more full picture. Smart Money Tracker allows us to take a look at the commitment of traders data, which will give you access to, again, basically taking a look at what hedge funds and banks and such are doing in the financial markets on the futures market. This tracks some really cool stuff. So if we take a look at gold, you can see what we were talking about, 60-40 in terms of long to short on the overall positioning. But let me warn you before you say, oh, that looks really bullish. Let me warn you, gold was all the way over here at one point with like an 80% long ratio. It's come down a lot, and it seems to be moving this direction, not this direction. So let me also show you this next section. The latest non-commercial COT change will show you the change that happened in the recent week. It's very important stuff to pay attention to. Look at this. We have down here a net change week over week of minus 2.8%. This is following a previous week where bearishness existed as well. So if we scroll down here and we change this to, let's find our gold here. We'll switch to gold. There it goes. Look at this. Gold, you can see, has been consistently seeing outflow or bearishness from major, professional traders, right? The dollar, opposite story. We've seen a net increase in bullishness for the dollar in previous weeks. Now, this is of course going back several weeks, so we can take a look at that data over time. The COT data here on the EDGEFINDER has been something we've worked really hard on. I will say right now, if you guys would like access to the EDGEFINDER, there will be a link down below in the description where you can chat with a representative from my team. We're a software company out of Atlanta, Georgia. We build software tools for traders, including this and many other key metrics inside of the EDGEFINDER. If you'd like a copy of the tool, if you'd like to purchase one, you can send a direct message by clicking that link at the top of the description and chatting with someone from our team. And I will say this, if you're about 9-10 minutes into the video with me here, I just want to say thank you for your support. And also, if you let the representative that you're speaking with know that I sent you and that you are a subscriber on the YouTube channel, we'll get you an extra discount off the software as a special thank you to you for your support. So thank you for watching my videos. Anyways, back to this. Again, that's a net bearish flow for gold. And so that's another reason why, when we go back to the top, when we go back to the gold scanner page here, that's getting a -3 score. It's very bearish read here for gold. Okay, so if we take a look at this and we add this to our study here, let's make ourselves a little bit more room. What we can see here is that COT bias, bearish, right? So this is another reason that currently I'm still going to be slightly more inclined to be bearish on gold. Now again, we're going to see if we can find more stuff. I'm trying to be impartial, but I'm going to go through what we have here. Retail sentiment doesn't give us anything significant at this time, 54% to 46%. So retail traders are pretty mixed in terms of what they think is going to happen next. Usually we take this as a contrarian indicator. So if retail was super long, it would be bearish. And if retail was super short, we would be bullish. Now, I will clarify what we look for is we look for a greater than 60% in either direction to give us a signal. So that's why we're seeing no signal generated by the algorithm. So next up, we take a look at seasonality. Seasonality suggests that we are entering not a great time of the year for gold. October, November, last 10-year averages have been down by almost 1% on average. So it's pretty significantly bearish in that camp. So again, seasonality, bearish. So again, and I'm trying to stay as objective as I can with the list of things that we pay attention to. But again, you could see there are some things that are bullish, so we'll get to those in just a second. Seasonality, trend reading to the downside overall, I'm gonna say actually, you know, if you take a look at this chart, it depends who you ask, right? Some people are going to say this is a bullish chart. Some people are going to say it's a bearish. You might say, well, that's clearly a bearish. It's been moving down. Well, yes, but to the bulls' credit, I mean, there was this nice little break above and the candle closed really strong last week. That's what kept me from entering any short positions. I was waiting to see price action kind of give back some of a wick or something to show some weakness. Did not quite get it. So we're going to have to watch that closely. I think there's still a fair point. You know, this market has been pretty downward trending, but right now, I'm going to give this a neutral score. And in terms of bullish to bearish, I'm just going to say, you know, price action, short term looks strong. So, you know, again, to the credit of the bulls, you take a look at price action. Here's the problem, I will say, again, and if you're 12, 13 minutes into this video with me, I appreciate you being here. And I want to say, you know, most traders would not have made it this far into the video. Most people only pay attention to this stuff, right? Price action, you know, I get it. People say, you know, price action is king, and I'm a big fan of using price action and technical analysis in my trading, but there are real factors that are on the screen right now that matter tremendously more, in my personal opinion, than simply drawing a line on a chart. Again, this is, you know, if you want to take this stuff seriously, you've got to understand what's really moving prices, and it's not just a head and shoulders pattern. You know, those things can be very useful in complement to all the other indications that we're talking about, but this stuff really matters. This is what's really truly driving demand or supply in a particular market. It is not simply, oh, it hit a level of resistance and that's all that matters, right? We've got to consider all the major players at the table. It would be like, you know, ignoring the rest of this stuff, in my personal opinion, is like you have all this great information, you're only picking to look at one singular point of view. You know, again, it's like if you were to argue with somebody who's so politically charged that they can't possibly see any other person's perspective ever. You wouldn't be a very worldly or very understanding or even a really fun person to talk to unless someone completely agreed with you, right? It's important to consider all the factors, all the drivers that move the markets. So anyways, let's keep going. Trend, again, we're gonna lean that kind of just neutral to slightly bullish in the short term. GDP growth, this is probably something to pay attention to. So GDP growth actually, in some ways it's still, overall it's strong, but however, it was less strong than some were expecting. So it's getting slightly bullish here for gold. Now again, understand that gold typically does well in an environment where inflation is high and at the same time you have growth slowing, right? So we're not necessarily fully in that camp because we do still have a relatively strong economy in the US. So this one I'm gonna say is still kind of too mixed to put on the tape. I guess you could, if you had to put it on here, you could say economy showing signs of potentially slowing. Of course, that is a bullish catalyst for gold. So I guess we'll just put it on there to try and stay fair. Inflation remains overall a stubborn issue, and inflation being a stubborn issue, it's kind of a hard one for gold because elevated levels of inflation cause commodities to rise, but it also causes the Federal Reserve to raise rates. So that's, of course, a super bearish thing. But inflation being at its current level, I'm not going to say it's like a super alarming bullish catalyst for gold. That's why it's not getting a strong reading. This indication, by the way, goes -3 to +3. So we're going to leave that. We'll come back to that. But again, that inflation right now is not at a point that I think it's a major bullish catalyst for gold. Interest rates, labor market, again, overall favoring, labor market being relatively strong. That's going to probably favor the US dollar and Fed's intentions to potentially keep rates high. So those are going to be bearish catalysts for gold. Again, you could take all of this stuff and you could basically narrow it down to, is this bullish or is this bearish? Well, that's the whole point of the EDGEFINDER. And I know, that is the aim of the EDGEFINDER. The EDGEFINDER is to score, the whole purpose is to score these things for you, so you don't have to do a full breakdown like we just did. What I just did is a high level breakdown on gold, and it's basically analyzing much of the same things that the EDGEFINDER does automatically. So for me, again, where's my bias? Well, I'll give you transparently, I am leaning bearish. If you couldn't already tell, there's enough factors on here that keep me more on the bearish camp. However, I don't like the current price action very much. Again, I mentioned very strong in the short term. So I'm going to look for possible rejections. If we don't get rejections, if we don't see, formations that start to look bearish, then I absolutely will not be looking for shorts. For me, the fundamentals align bearish. But until the technicals agree, and until this changes to this side, right? We don't have that yet. If this were to shift over here, short term start to look bearish, that would perhaps suggest, okay, it's time to look for shorts, right? That's my bias on that. Again, that's kind of where I'm at. I've broken this down fundamentally and technically for you. If you did enjoy this video, if you want more of these types of videos where I do a kind of a bull bear case, do me a quick favor and hit that thumbs up button and comment down below something like do more of these, or just let me know that you'd like to get more of these types of videos, and I'll do my best to put out more of them in the future. Again, get yourself a copy of the EDGEFINDER if you'd like to get access to the algorithm that we've built here at A1 Trading for traders. It can be an excellent resource. Again, a lot of the stuff that I just did was aided by the EDGEFINDER. And if you're somebody who's new and understands the value of fundamentals but struggles with their admittedly more complex nature, this might be the right tool for you. So click the link in the description. You can chat with someone from our team and see if it is a right fit for you. We can also set up a call with someone on our staff if you'd like more information about the tool, and we'd be happy to get your hands on the software if it's something you think would be helpful to you. Thanks guys for watching. Have a great day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel, and we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.